Hey everybody, William Shashaty here again with Trinity Mortgage. Interest rates have been in the news a lot lately. And, over probably the last 60 days or so, 30-year fixed rates probably went from, 3.5 all the way up to 4.5. Now today's interest rates for a 30-year fixed rate is between 4.5 and 5%, somewhere in there. And, I started thinking about this because even last week when we had the big change and the Fed came out and changed the federal funds rate and you hear all the news about inflation and the war in Ukraine and everything, interest rates alone last week increased almost a half a point. But we saw this on the horizon. We knew it was coming. So today, 30-year fixed rates are somewhere between 4.5 and 5%, somewhere in there. So I started thinking about this, and I know that people, when you tell them today, when they ask what the interest rate is, you say, it's like 4.5, 4.6, somewhere in there, 4.7. And they go, wow, amazing. And I'm thinking to myself, for some perspective, obviously, we've had this low interest rate market for a period of over 10 years, 10, 12 years, where people have gotten used to these kind of interest rates. And, it's interesting because I've only been in the business 38 years. It's been a while. And in 1984, when I first got my real estate license, I was speaking to somebody, I was trying to get a listing from somebody, and the owner of the house was bragging to me about his 12.5% interest rate on his mortgage. He said, "You'll never see this rate again." And I sort of, back then I didn't know anything. I was a young kid. I didn't know too much about interest rates at that point. But what I did know was that the year before, the interest rates were 17%, right? So I thought, maybe he's right, because 12.5 at that time was a great rate. So the reason I bring all this up is because to have some perspective on what's going on with interest rates. We are so used to low interest rates that if we see something change, and we had a dramatic change over the last 60 days, people start to get, a little jaded, if you will. What are you talking about? I mean, that's crazy. Well, for perspective, not too crazy. Some of you listening know what I'm talking about. So I bring that up to say sometimes when we talk about refinances, and some people are considering taking cash out of their home because, like I said in a previous video, maybe they want to put a pool in or add a room or just make improvements. And maybe they have an interest rate right now that's 3 or 3.25, and then you tell them, well, it's 4.8 now or 4.7. They go, huh, crazy, right? But at the same time, a lot of these people get emotionally attached to the 3.5%. I understand it's a better rate. Okay. But what I try to get people to understand is the perspective of, if you went ahead and made those improvements, but let's say you took credit card advances, at 17 or 18%, which some people will do just so they don't go from their 3.5 to 4.7 today. Some people will actually, take out a loan, a personal loan that might be 12 or 13%. To make the improvements instead of cash out refinance on their home, because they might take them from 3.5 to 4.7. And by the way, 3.5 to 4.7 is tax deductible interest. So they have a hard time letting go of that low rate, but at the same time, prospectively, they're not really thinking about the high rate they're paying on the money they're using to make those improvements. So I just want to give this to you so you can consider this. There's many times where people increase their interest rate on their mortgage because it's a wiser financial decision. It's not always a good feeling, obviously, to go up in interest rate. But when you're comparing what other interest rate you'll pay on that money, it's probably, a better way to go than to refinance your home and take out the lower interest rate, fixed rate, interest deductible loan, as opposed to taking out the higher rate. I bring that up because, again, a lot of people are getting nervous about what's going on with interest rates, but for some perspective, they're still relatively low. They're still, relatively attractive for the things that people, want to use mortgage interest rate for, especially now when so many people have so much equity in their home, where they can take it out and just do a lot of things with it and still have a relatively low rate to do that with. just want to leave that with you. Thank you so much for listening. Again, please like us on Facebook, follow us on Twitter and Instagram. We appreciate it. Again, if you just go ahead and like us on YouTube, please share our videos. Thanks so much, and we'll see you again.